There are three markets that I love to start my trading day with. In fact, it doesn't matter if I'm starting my trading day pre-market, midday, Asian session, Sunday night, doesn't matter. First thing in the morning, last thing in the evening, the first thing I want to make sure I have a pulse on is the S&P, the euro, and the long bond. And we could throw in even the 10-year and the 2-year note into that group, but treasuries, ZB is a great way to do it. 6E is a great way to look at a little bit of Dow, a little bit of NASDAQ, because we've got XLK, we've got Apple, Microsoft, we've got the XLF, JP Morgan, right, the banks, and then of course we've got the euro, which is an inverse relationship back to the dollar. If you start with these three, you immediately have a great idea of what's going on perhaps at a yield perspective, right, ZB, what the dollar is doing, 6E, and whether or not we have risk appetite or risk aversion, ES. How did these end the day? ES is up. We had a pretty decent little overall. Take a look at the 1 hour chart here, 8 a.m. to 4 p.m. We pretty much spent the entire session moving higher. Now, was that because bond yields were moving lower? Well, it sure doesn't hurt. Now, this is an interesting day because maybe for the first time in quite a few days, we saw a consistent amount of bond strength while we saw a fairly consistent amount of indices strength. Remember, up until now, this has meant bonds moving higher. This has meant we're very much in the mode of which bank is next. KRE, XLF are a great way to take the pulse of that. If you're a futures trader, which I imagine you might be tuning into this video, but even if you're not, futures, ETF, option stocks, I don't see, those lines are very blurred. I don't see distinct differences between them anymore because once we realize that one market affects another so very much, we're looking at one symbol versus affecting another symbol and this overarching idea of the market, right? For me, the market is ES, 6E, ZB, just a really easy way to take a pulse of a lot of different moving parts. KRE, XLF moving higher while bonds move lower tell me that at least today, as we wind down the second to last week of March, going into the end of quarter next week, yields were able to move higher, not necessarily in a flight to safety despite the Deutsche Bank news this morning, but that yields were dropping as equities, including regional banks and financials, were moving higher. My favorite place continues to be the NASDAQ. It did not benefit as much in many ways when you look at the range as the S&P and the Dow, because the S&P and the Dow have been hit far harder than the NASDAQ. That wick hanging below this candle body to end the week, to go into the weekend, look, we don't ever want to say markets are crashing. What are markets? If I'm talking about markets, let's be specific to the symbol. Yes, KRE is in still a world of hurt. One up day doesn't undo it. XLF is still very much in a bearish market. One up day doesn't do it. But XLK, the most important sector, barring banking crisis, because it's weighted number 1 in the NASDAQ, number 1 in the S&P, number 2 in the Dow. This is the king of the sectors. The S&P is a little bit tech, a little bit financials, a little bit healthcare. The tech side of things, gang, take a look at the bottom of this screen on the daily. In fact, let me make this a little bit bigger. This is now for the first time in quite some time, staying with an uptrend for more than a session or so. This is the longest stretch of a green multi-trend we have seen. Hard to be bearish the market when the most important sector is heading higher. Again, how do I want to measure that? The market, S&P moving higher today. Bond yields lower today as the ZB futures moved higher. A little discerning that we exhausted in the daily price movement range here, and pull back. But that just means that if we hit the daily price movement range support level on Monday, we can just refire those buys. We can refire the longs. And if we're seeing, and this one I'm a little surprised. I would have liked to have seen a weaker a weaker US dollar, not a weaker euro. They have an inverse correlation. So as 6E moves lower, that means dollar index, this could be the DX futures, is moving higher. However, neutral market on the daily. I can't buy on the 1 hour, but I could look for a daily price movement range buy come Monday in 6E, which would actually be very much in line with what I'd like to do with the euro anyways. It's north of the 200 propulsion. We do have higher expectation for the Federal Reserve to have to cut rates, maybe as soon as July. So this is how I'm looking at 6E, ZB, and the S&P with extra emphasis on tech, with extra emphasis on semiconductors. I'm keeping an eye on consumer discretionary. Not my favorite part of the NASDAQ. XLC looks fantastic. So if there's a lagging sector in the NAS that could cause NASDAQ futures traders some trouble, it could be XLY, which is quite frankly just really Amazon and Tesla. Those are the moving pieces, gang. Right here, we've looked at futures, but we've looked at sectors. We've looked at treasuries. We've looked at currencies. We've looked at individual stocks, all in the same breath, in that they're all going to affect each other. Keep that in mind. We're going into the end of quarter. Things are going to get very interesting. If you're managing a lot of money, imagine put yourself in an asset manager's shoes. Millions, if not hundreds of millions of dollars that you need to keep showing your clients you're putting to work. Where are you going to be putting them to work? Breaking the markets down as we just have in this update is going to be exactly how we want to figure that out. I'll see you next week. Oh, by the way, I will actually see you this Sunday in the Raghee Report at the Simpler Trading YouTube channel, as well as my YouTube channel at Raghee Horner. And I will be covering much of what I have shared with members in our first issue of the Rebooted This Week in the Market. So TWM is covering what I look at when I'm taking this kind of view in the market. And that means, again, S&P, right? Euro, treasuries, but what else can we see in terms of moving parts? So TWM is going to cover that, as well as a number of the things that I'm looking at with the current banking crisis, what the 2-year note has to say, what we're doing with crude oil, what my preferred bullish and bearish stock watch list, as well as ETF watch list looks like. So I'll share a sneak peek of that with you on Sunday. All right, gang, be good to each other. I'll talk with you soon. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.